What's going on, guys? Welcome back to the channel. Is the pain over for AMC and the overall market? That is what we are going to be talking about, as well as going over an intraday update about everything you need to know around AMC. We are currently up over 2%. Things do look good, but are they going to stay good? That's what we need to talk about. And just to pre-reference this video, I am more bullish than I am bearish, but I don't necessarily think it's all peaches and roses from this point out. So let's break it all down for you guys, give you guys all the information you guys need to know. Hopefully you get some helpful insight in this video. If you do, make sure to hit that like button, consider subscribing to the channel. Let me know what you guys think about this information down below in the comment section. Provide me your bearish case, your bull case. What do you think is going to happen with the overall market? What do you think is going to happen with AMC? Let me know that information. So with all that being said, let's get straight into this video, and we are at $37.52 currently with AMC stock. We are headed up a little bit more today, like I said, up 2%. We really need to get above $40 per share until $40 will become our support level once again. It looks very likely that will actually happen, but as we do know, AMC is revolving or following, I should say, the overall markets, and that's where it's very important to pay attention to what the overall markets are doing. And I still can't reasonably figure out why the markets are up, well over 1% on all indexes. Just besides its volatility, people are just likely buying the dip because the Nasdaq was down over 7% from the highs, S&P and the Dow down 5% from the highs. So it's likely people buying the dip. But if you look at the S&P on a technical basis, you guys can see that we are pretty much right on our 100-day moving average. So I would watch to see if we do close above this 100-day moving average, if we actually close well above this, or if we close under this. If we close under this today, it is not a great sign at all. If we close above this, we're likely to go back to the 50-day moving average, just like we did see the last time around when we closed at the 100-day, bounced back up to the 50-day, came back down to the 100-day, and we have been, under the 100-day for a while now, but just kind of flirting with that. We'll go down, we'll come back up, we'll go down. So that's kind of what I expect. I expect to either go up or probably more than likely go down, depending on some other things that we are going to be talking about. If we do, for whatever reason, have a very red day tomorrow, which anything is possible, we could have a very red day or very green day, then watch the 200-day moving average, which is going to be the next level. But I do think part and part it is trading algorithms that are helping to bid up a lot of stocks today, helping us to go up in the overall market. Now, let's take a look at the main thing that I do want to talk about. It is right here. U.S. faces a recession if Congress doesn't address the debt limit within 2 weeks, Yellen says. And I do think the debt ceiling will get raised. Don't get me wrong. We've never defaulted before. I do think it will get raised. But the longer we do drag this out, we risk a credit downgrade. The last time we got a credit downgrade was in 2013. 2011, 2013, we got downgrades in both of those years, and the next day we dropped 6.6% in the overall market. So needless to say, the longer this does play out, the more likely you are to see more pain in the markets, as investors just don't want to be a part of Congress and their drama and the debt ceiling situation. So let's read the key points. Treasury Secretary Janet Yellen believes the economy would fall into a recession if Congress fails to raise the debt ceiling before a default on the U.S. debt. In quotes, "It would be catastrophic to not pay the government's bills," Yellen said Tuesday. "I fully expect default would cause a recession as well." President Joe Biden on Monday called on Congress to raise the debt limit this week and avoid even approaching near certain economic turmoil. Who knows if this is actually going to happen? It looks like Democrats are going to have to do it by themselves, and they certainly can, but who knows? It's really just a political shit show at this point. So they might just drag this out like they have before, coming 11 hours until the debt limit actually did expire, when we did get our credit downgraded. I believe there's one vote this week. If that does not pass and go through, then you're looking at some problems for the overall markets. But we do have some other things happening as well. We do have on Friday the jobs report that is coming out. As we do know, we have Jerome Powell possibly indicated in his last speech in October that they are going to start tapering at their November meeting. That is November 14th, I do believe. So if the jobs report does come out, good, then they will probably start tapering for sure. If it's a huge miss, they may hold off on tapering. So that is what you guys need to know. What is going to be moving the markets? Obviously, the whole debt ceiling situation, as well as, the jobs report that does come out on Friday. But we do have a couple days until Friday, so expect big moves to the upside and the downside. I don't expect us to really bounce back up or to crater too far until we do get an update or the debt ceiling situation just continues to drag out. Point is, I wouldn't be making any short-term trades on AMC. If anything, this is a chance to buy the dip and continue to load up, as we were just at about $53 per share, likely to go back up to those levels once the debt ceiling situation is ultimately resolved, which I do think it will be resolved. So let's now talk about the data and what you guys do need to know. So when it comes down to the Ortex data, we'll go ahead and refresh this page. Keep in mind, this is only 85% of the prime brokers that are reporting this information. These numbers may or may not be accurate. This is really our lowest case scenario, right? So the short interest percentage of free float is at 20.39%. And if that is the worst case scenario, the lowest the short interest could possibly be, that is a great thing right there. Now, I do expect this to continue to tick up as we have seen a sell-off, but it does seem like the Ortex data is more delayed than it used to be. So just keep that in mind. I do still expect the short interest to go up to about 21%, but you are seeing the estimated shares that are sold short at 104.3 million, which is a very large amount, specifically relative to the volume that we see on any given day. Now, yesterday it was only at about 40 million for volume, so that is well over 2 days worth of volume, and that is why we are seeing the days to cover going up now at 1.33. And essentially, if you guys don't know, the days to cover is if all of these shares needed to be covered at one time, how long would it take? Now it would take 1.33 days to cover, and days to cover was much lower at some points at, about 1 day to cover. And I've seen some analysts, and they essentially, when they're trying to talk about why AMC could not short squeeze, they were saying the days to cover is super low, under 1, but now we are seeing this going up, meaning that it's going to take a longer amount of time for all of the shares to actually be covered, meaning the short squeeze is just more likely, and it could take a little bit longer once it does start, driving the price up even more. Now, the share utilization is at 85.96%, which is right where I want it to be. You want to see, in my personal opinion, shares that are available to be lent out, not a scarcity of shares like you'd see at about 95-98% like we have been at 99% in the past. There is actually a decent amount of shares that can be sold short at this current moment, so that is a good thing. You want to watch to see if this does stay above 80% at least, so there's not a abundance of shares that can be shorted, and I want to see this really, like I said, in between about 80 and 95%. You're not looking at any 4-share recalls until you get to about 90, 98, 99, 100%, but I really don't expect either which way. I don't think this is going to drop too low, or I don't expect 4-share recalls to actually happen. Free flow on loan 22.13%, just still, I mean, it's stayed relatively flat. I think it's just Ortex not updating their data as frequently anymore, but that still is about 2% higher than the estimated short interest. So like I said, that supports my thesis of the short interest going to about 21% by the end of this week. That is really all you guys need to know. Let's talk about the Stock O tracker data. We are seeing in the money calls for this Friday at almost 14,000, out of the money calls at 157,000, in the money puts at about 16,500, out of the money puts at about 54,822. So comparing in the money calls and in the money puts, it's pretty much neutral, more in the money puts, but you're not seeing a lot of action from the market makers actually having to go out and buy shares to hedge for the calls or to short shares to hedge for the in the money puts. It's pretty much neutral. Now, next week, you're looking at 18,000 calls that are in the money, 162,282 that are out of the money. Now, if we do see a rally in AMC, if we do see the debt limits get resolved and a lot of the fear die down in the overall markets, you can see a little gamma squeeze just because we do have a lot of out of the money calls, and a lot of these calls are pretty close to in the money. You know, a lot of them are focused at the 40, the 45, 50, 55, $60 strike. So if we do see a big move to the upside, you can see a little bit of a gamma squeeze just from the market makers hedging these calls that would go into the money. But you're not really looking at anything significant as far as a major gamma squeeze until obviously the January 21st, 2022 expiration date, where we do have 132,000 calls that are in the money, as well as 216,000 calls that are out of the money. So that is going to be obviously where we're going to see the most volatile week as far as the option chain and what the market makers are having to you know, hedge for the downside if we do go down as far as puts going into the money, or for the upside as far as obviously the market makers buying shares to hedge for the calls. So that's what you guys need to know. Not too much else to add in this update. AMC is continuing to climb, which is a great thing, up 2.60 or 2.71%. Now, if we get above $38 per share, we're likely to close at about $39 per share. I don't expect us to close over 40, but if we do, AMC can be very volatile, and that would be a great step in the right direction. So that is all for this video. If you guys got any value out of this video, or help cleared the air on how long this pain could last, or you know, how soon we could get back to normal with AMC, hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section what you guys think about all of this information, and if you guys want to directly support the channel, links to do so down below in the description. But there is a link for the buy and sell alerts if you guys want to be notified every time a trade is bought or sold in real time, whether it's a day trade, swing trade, or longer term investment. Check that out. We keep it very inexpensive. It literally pays for itself, and just a couple trades this last month alone would have made you per trade enough in profits to cover that cost for 1 to 2 to 3 years. So definitely check that out. Pays for itself. We keep it very inexpensive. That also helps to support the channel and make this all possible. So that is all for this video. I will see you guys in later videos. You guys take care.